Ed Bastian, CEO of Delta. We're going to talk about the reason the stock's under pressure right now, the unit revenue. But before we even get to that, you're coming off a record revenue for the second quarter. So this is one of those cases where you put up good numbers. The question is, the street was expecting a little bit more.
Absolutely. And we will talk about the demand outlook, which actually isn't as bad as the headlines would lead you to believe. But second quarter was great. Our team did an amazing job. Kudos to them. Starts with the operations. Stellar performance across the board. Best reliability in the industry, month in and month out, as we've been doing all year long. Best in our history in terms of operations. Demand was really healthy. And when you couple great operations with strong demand, we hit our APS that we guided to, right on the number. The consensus was, I think, right with where our number is. Free cash flow in the first 6 months of the year is close to $3 billion. Again, we guided for full year 3 to 4. We're already at close to 3. We've had a really great summer that we're looking towards. Yet, at the same time, we got to talk about what's going to happen with respect to the industry picture.
And let's talk about that. Unit revenue or revenue per seat mile. Mm-hmm. You guys were giving guidance of flat to negative 2%. You came in negative 2.6%. Mm-hmm. And your guide in terms of EPS for the third quarter is shy of what the street is expecting. Are we seeing cracks in the consumer right now, or is this an oversupply situation in the industry?
I think it's more an oversupply situation in the industry as compared to cracks in consumer. Let me provide a little context. First of all, the quarter we just finished, the second quarter, second highest quarterly performance in total in our history. The only quarter that was higher in our history was second quarter a year ago. And if you recall where we were a year ago, that was the first time that everyone could travel almost anywhere in the world and had learned, and prices were sky high. It didn't matter where you're going, particularly internationally. The question a year ago I was getting all the time was, when are these sky high fares going to come down? And my response was, when we can bring more capacity to bear. Well, the industry brought more capacity for this summer. Capacity is up 8% for the summer. I'm talking particularly in the domestic marketplace. Real demand in the summer anyway, and I'm saying summer between June and August, is probably closer to 4% in terms of real organic demand growth. So you do have an oversupply. Now, that oversupply is limited on the lower ends. You see the discounters particularly discounting heavily, and as a result of that, you've got some fare and yield weakness in the quarter. The good news in all that are two things for Delta specifically. One, we're pretty well insulated from that. Yes, we got hit probably by a point or two in terms of our outlook, in terms of where people thought we'd be versus where we're going to be on revenue. I understand that. But we're premium. We've got international, we've got business, we've got a much stronger product mix, we've got our American Express loyalty stream. So the impact on Delta is fairly limited. Secondly, the industry is already correcting for the oversupply so that by the end of August, that 8% is already back down to 4%, more in line and in balance with the consumer demand. And as a result of that, we expect in September, our domestic unit revenues are going to be back inflecting positive once again.
So you're confident, though, that the industry can correct on the overcapacity? Because let's be honest, this is an industry that has a pretty poor track record in terms of showing the discipline when it needs to show the discipline.
Candidly, it's remarkable. The industry is moving, and has already moved. By the way, these are the numbers in the tapes. So it's not an anticipation. Yeah. This is actually what's going to fly coming in the next few months and for the fall quarter ahead. You do not have to guess. You can go see what it is. I've never seen the industry move as rapidly to kind of adjust it. And the reason for that is that you do have in the lower end category in our industry, you've got a lot of challenges in the lower fare categories. Summer is when people travel. And so all the discounters put as much capacity and supply into the market when people want to travel. I get that. But in the fall, when that demand comes way down, the industry really is acting responsibly.
Ed, I know Joe's got a question for you. Joe, go ahead.
It's kind of a cultural question, Ed, and it's good to see you. We always appreciate when you come on. I'm just wondering, in the world, the way it is today, Ed, does it ever give you pause to try to cater to the really well-heeled? I mean, you have to, because that's where the growth is. That's where, that's where a lot of the profitability is. But I'm thinking about these incredible lounges you're building that are very exclusive, or refurbishing the planes to have all the, in the front of the plane where you have those pods where, Some people in their entire life will never fly in one of those, Ed. I understand luxury lodgers can get away with that sort of, but as an egalitarian service provider for everyone to travel, do you have to tread kind of lightly when you're, it almost seems like you're catering to, the income gap, the people that are doing better?
Well, a couple things, Joe. As compared to being the airline for the affluent, which I understand people want to have some luxury experience, they're focusing on investing in their own experience. Delta wants to be there for, but we're also the largest airline in the world when it comes to overall revenues. So clearly, we're catering to everybody, and we have products in all categories. The growth that we've seen post-COVID is clearly, though, in that higher end segment. And that's where Delta specializes, whether it's business travel, whether it's international, whether it's the American Express relationship that we have. And as a result of that, that's giving us the revenue back that we can invest in these lounges, and we can invest in free Wi-Fi, and we can invest in the experiences that customers really want.
Okay. All right.
Ed, I have a question for you regarding the consumer. We have record demand right now. On the leisure travel side, separate from corporate, are people taking more trips, or are they saying, I'm taking about the same number of trips as I've taken in the past, but I'm spending a little bit more? I'm upgrading if I can. Are you noticing a difference?
Oh, yeah. The experience economy, which is what our industry serves, is doing well. And we've talked for several years now how the services economy was once again going to eclipse the goods and the retail sector. And we're back, and we're actually continuing to grow at a pretty healthy clip. I don't see that changing. Again, you look at the summer. You look at what's the big news where people want to go, especially our younger demographic. They want to go to Europe to see Taylor Swift. Well, that's what's selling. You want to see, friends and family that you haven't seen in a few years. That's where people are going. Baby boomers are taking cruises anywhere around the world. That luxury element is a piece of it, but it's the experience broadly where people are going. And as a result of that, it feeds right into our business strategy, which we've been on for 15 years to differentiate in an industry that forever was a commodity business, no longer with Delta.
Ed, thank you very much. Speaking of experiences, the man's going over to Paris for the Olympics.